Hello and good day. Our topic for today is securities markets, definitions, and concepts. This topic covers the meaning of securities, the definition of market, the types of markets, and the characteristics of a good securities market. Before anything else, I would like to give you the topic outline for today's discussion. First, what is the meaning of securities? Second, what is a market? Third, types of markets. And fourth, characteristics of a good securities market. Without further ado, let's start. What is the meaning of securities? When we say securities, these are proofs of one's ownership or indebtedness in a company or an entity. In other words, kapag sinabing securities, ito yung magpapatunay na ikaw ay may pag-aari sa isang company or isang entity. At ito rin yung magpapatunay na meron kang liability or debt sa isang company or isang entity. That means meron kang utang sa isang company o sa isang entity. In order for you to better understand securities, let me give you examples. Two typical examples of securities are stocks and bonds. Unahin natin yung stocks. Stocks are shares of ownership in a corporation. Sabi dito, ang stocks ay shares. When we say share, a share is the ownership interest or right of a shareholder in an entity. When you buy shares of a company, you become a stockholder or shareholder of that company. And when you become a stockholder or shareholder of that company, you become part owner of that company. So itong stocks or shares, ito yung magpapatunay sa iyo na meron kang pag-aari dyan sa company na yan. Usually, ang tinatanong, magkapareho ba ang stocks at shares? Actually, stocks and shares are terms that can be used interchangeably. Meaning to say, pwede mong gamitin yung shares, pwede mo rin gamitin yung stocks. But take note, specifically, there is a difference between stocks and shares. Study the following. A owns shares of Coca-Cola Company and B owns stocks. Dito sa first, ang ginamit ay shares at dito sa second, ang ginamit ay stocks. Observe na sa first, merong Coca-Cola Company. That means merong specific company. Therefore, gagamitin mo yung shares when you are referring to a specific company. Sa second, walang nilagay na specific company. There is no specific company. Therefore, gagamitin mo yung stocks when you are referring to any company, not a specific company. And that is the difference between stocks and shares. But take note, although specifically meron silang pinagkaiba, they can be used interchangeably. Next, bonds. A bond is a contract of debt whereby one party, called the issuer, borrows fund from another party called the investor. Ang bond ay isang contract of debt. Meaning to say, kapag contract, there is at least two parties. At yung dalawang parties na yan ay issuer at investor. Si issuer, siya ang magbaborrow ng fund. He is the borrower of the fund. Si investor naman, siya yung maglilend. Siya ang magpapahiram ng fund sa issuer. So here, between the issuer and the investor, ang may utang ay si issuer. Si issuer, siya yung mag-i-issue ng bond certificate. Itong si issuer, i-issue niya yung bond certificate kay investor. And in exchange, maglilend ng fund si investor kay issuer. As you can see, since bond is a contract of debt, this is a proof that there is an indebtedness in a company or an entity. Merong liability or debt si issuer kay investor. So those are the typical examples of securities. Again, securities are proofs of one's ownership or indebtedness in a company or an entity. Let us now proceed to the second question. What is a market? The market that we are going to define here is not the market in research, but rather the market in business context. When we say market, it is a mechanism that brings together buyers and sellers to aid in the transfer of goods and services. In other words, when we say market, it is anywhere where the buyers and sellers come together and transact with each other. Of course, for the purpose of buying and selling goods and services. A market does not necessarily need a physical location. For example, the transaction is an online transaction. In an online transaction between the buyer and seller, the buyer and seller can transact online without the need of physical location. What is important here is that the buyers and sellers can communicate the relevant details of the transaction. Therefore, in a market, hindi importante ang physical location. Ang importante, the buyers and sellers can transact with each other. In a market, it is important that the buyers and sellers can communicate the relevant details of the transaction. Ano nga ba yung mga relevant details of transaction? For example, the goods being transacted. Of course, dapat alam ng buyer kung ano ang binibili niya at the same time, alam ni seller kung ano ang binibenta niya. They must agree on certain goods. Of course, hindi enough na alam nila yung goods being transacted. Dapat alam din nila kung ilan. Ilan ba yung goods in their transaction? Ilan ba yung bibilhin ng buyer? And at the same time, ilan ba yung ibebenta ni seller? Ilan ba yung itatransfer na goods ng seller? Of course, another important detail is the price of the goods. Of course, since their purpose is to buy and sell goods and services, dapat alam nila kung ano ba yung presyo ng kanilang binibili or kung ilan ba yung presyo ng pagbenta nila ng goods and services. As you can see, dapat merong meeting of minds. Dapat meron silang agreement and their agreement should be communicated with each other. Next, types of markets. Markets are usually designated by the type of goods or services that it trades. Hence, a foreign exchange market is where currencies are sold and bought, while a securities market is where all forms of securities are traded. That means, klina-classify ang market depende kung anong type of goods or services ang binibenta at binibili. Let's say, food market. Ano ba ang binibenta at binibili sa food market? Of course, food. Such as meat, fish, chicken, vegetables, etc. Tinawag siyang food market because ang binibenta at binibili sa food market ay food. Sa foreign exchange market, currencies. At sa securities market, of course, securities. Securities markets can further be classified into the following. First, money market. Second, capital market. Third, stocks market. Fourth, bond market. And fifth, derivatives market. I will discuss each securities market one by one. Let's start with money market. Money market is the market for highly liquid, short-term fixed income instruments such as treasury bills, commercial paper, and bank certificates of deposits. Kapag sinabing short term, usually yung term dito ay less than 1 year. So kapag sinabing money market, ito yung market na designed for the making of short-term loans. Actually, it is the institutions with temporary surpluses of funds that meet the needs of borrowers who have temporary fund shortages. Meaning to say, yung mga institutions na merong sobra na funds, yung sobra nilang funds, yan yung ipapalend nila. Yan yung ipapahiram nila sa mga businesses or entities na may shortage of funds. Next, capital market. Capital market is the market for longer-term securities such as bonds, stocks, and mutual funds. This time, sa capital market, yung maturity ng securities ay more than 1 year. Unlike sa money market na kung saan yung mga instruments or securities, meron lang silang maturity na less than 1 year. Capital market is designed to finance long-term investments by businesses, governments, and households. This is another difference between capital market and money market. Diba sa money market, ang kaya niya lang i-finance is yung short-term investments or yung mga temporary investments. Pero sa capital market, This is designed to finance long-term investments. Trading of funds in the capital markets makes possible the construction of factories, highways, schools, and homes. Next, stocks market. Stocks market is the market for various equity securities such as stocks and warrants. Kapag sinabing equity securities, these are securities that represent ownership shares. Basically, para sa investor, ang equity securities ay financial asset. Pero sa issuer, ang equity securities ay equity ng issuer. Ang examples ng equity securities ay stocks and warrants. Kanina na-discuss ko na yung stocks. Kapag sinabing warrants or warrant, a warrant is a security which grants the holder the right but not the obligation to buy or sell a stated number of underlying shares of stock at a specified price during a specified period of time. Just like stocks, a warrant is also a security. It grants the holder the right but not the obligation to buy or sell a stated number of underlying shares of stocks. Meaning to say, when warrant is bought by one person or by the holder, merong right yung holder na ibenta o bumili ng shares of stocks at a specified price during a specified period of time. Meron siyang right para bilhin o ibenta yung shares of stock na yon within that specified period of time, pero hindi siya obliged na ibenta o bilhin yung shares of stock na yon. As a result, he will not be forced to sell or buy that shares of stock at a specified price during a specified period of time. He has the right, but he has no obligation. It still depends upon the holder of the warrant kung ibibenta niya or bibilhin niya yung shares of stock at a specified price during a specified period of time. Next, bond market. Bond market is the market for long-term debt instruments such as treasury notes, treasury bonds, municipal bonds, mortgage bonds, and debentures. Kapag sinabing debt securities or debt instruments, this is a financial asset of the investor and a financial liability of the issuer. Kung sino ang nag-issue ng security, siya ang merong financial liability. That's why tinawag na debt securities or debt instruments. Kasi ang tinitignan on the point of the issuer. Sa debt securities or debt instruments, si issuer ang may financial liability. Unlike sa equity securities, that's why tinawag din siya as equity securities, kasi nga, on the part of the issuer, yung equity securities ay equity ng issuer. Ang debt securities, yan ay debt or financial liability ng issuer. Yung equity securities, yan yung equity ng issuer. Next, derivatives market. Derivatives market is the market for derivatives or instruments whose value are derived from other underlying assets. Examples of derivatives are options and futures contracts. Take note, futures contracts, not future contracts. Kapag sinabing derivative, this is simply a financial instrument that derives its value from the movement in commodity price, foreign exchange rate, and interest rate of an underlying asset or financial instrument. Therefore, as a financial instrument, yung value ng derivative ay depende dun sa movement of the commodity price, foreign exchange rate, and interest rate of the underlying asset or financial instrument. Actually, a derivative is an executory contract. Kapag sinabing executory contract, it is not a transaction, but an exchange of promises about future action. Expressed in the simplest terms, parties to the derivative financial instrument are taking bets on what will happen to the underlying financial instrument in the future. Next, characteristics of a good securities market. Paano ba masasabi na yung securities market ay maganda? Of course, it has to possess characteristics in order for it to become a good securities market. The question is, what are these characteristics? The following are characteristics of what is considered a good securities market. First, transparent. Second, liquid. Third, internally efficient. And fourth, externally efficient. Unahin natin yung transparent. One attribute of a good securities market is that there is equal and fair access to information. That means all participants in the securities market should have fair and equal access to information. Of course, it's not enough na meron lang equal and fair access to information. The participants must have timely and accurate information. For example, dapat alam ng participants yung presyo ng securities sa previous transaction at dapat alam nila yung presyo ng securities in the current transaction. Next, liquid. Another feature of a good market is that the securities can be traded quickly and at a price close to the prices of the previous transaction. Meaning to say, yung mga securities sa securities market ay madaling mabenta o mabilis na mabenta o mabili. And at the same time, yung presyo ng securities ngayon ay hindi nagkakalayo dun sa presyo niya in the previous transaction. Next, internally efficient. A good market should entail low transaction costs. Therefore, para masabi na internally efficient yung securities market, dapat mababa yung transaction costs. Ano ba yung examples ng transaction cost? Una, yung cost ng pag-access sa market. Yung cost ng pag-access doon sa securities market. Dapat mababa lang. Another example is yung cost of transferring the security. Yung cost ng pag-transfer ng security from the seller to buyer should be also low. And last, externally efficient. A good market is one where prices adjust quickly to new information such that the prevailing price reflects all available information regarding the security. That means externally efficient ang securities market kung yung presyo sa securities market ay flexible. In other words, the prices of securities can adjust quickly to new information. Again, the characteristics of a good securities market are transparent, liquid, internally efficient, and externally efficient. And that ends the discussion in securities markets, definitions, and concepts.